Welcome back to Entrepreneur Money Stories. Are you an online business owner not sure how to make sense of your financial statements? Every business owner needs to understand the language of money, and in this video, I will show you how. My name is Danielle Hayden, and I'm an online entrepreneur and experienced accountant. In this video, Victoria and I are going to show you how to understand your profit and loss statement, why it's crucial for any online business owner, how to get unstuck from the traditional accounting traps. We'll break down the basics from what most people focus on, what accountants focus on, and the most important metrics for you to examine. All right, Victoria, are you ready to dive in?
Yeah, let's do it.
All right, we specifically have Victoria on that episode because she is not an accountant, although she has been with us for quite some time now and is starting to kind of pass and be able to talk the language. I think that you can still pull yourself out of the element and be able to ask questions as a non-accountant. So she is here to be the listener's kind of devil's advocate to answer all those questions that you guys have.
Yeah, absolutely. I have definitely picked up on a lot of the lingo, but as much as I do know about accounting, I'm definitely not a bookkeeper. So I think that is also important to note and a little bit of the difference there. But I'm super excited to kind of be your pseudo client and get the non-accountant opinion out there and be able to ask some good questions.
Awesome. Well, so today we're going to talk. Now, this is going to be part of a series. So we are going to go through the big three, all three financial statements. So profit and loss, balance sheet, and cash flow statement. But naturally, we need to start with the profit and loss, also known as the income statement. This is the financial statement that gets the most time and attention. I think Hollywood moments, like most people have heard of a profit and loss statement, and a lot of that lingo is thrown around in the entrepreneurship world.
Yeah, I definitely think this is like the bread and butter. This is what people are familiar with. I don't want to say that it's like the easiest to understand, but it maybe just because everyone is a little bit more familiar with it, I think people generally understand it a little bit better. But just because you think you understand it doesn't mean that you know the ins and outs. So
Well, I'm glad you said that because what we're going to do is give you a high level overview of how do you read a profit and loss? So if you've never actually looked at your financial statements, how do you actually read it? We'll break a little bit of that down for you. Now, I'm not going to go line item by line item. If you want to do that, we do have our course, Finance Framework, in which we go through in detail. I mean, I share my screen in that course and we literally go line by line by line. So if you want that level of detail, you can check out our courses at kickstartaccountinginc.com and look at Finance Framework as your toolkit to get into the weeds a little bit deeper. But today, we're going to go over a high-level overview of how to read a profit and loss statement. I want to walk through what specifically most people focus on and the issue with that, what accountants focus on, and why I don't think that is as important, and then how you could use this information to actually manage your business. So let's go ahead and jump in. Overview of the profit and loss statement. I'm going to start from the top. Bear with us, guys. Like, this is one of those episodes that you can flag, come back and listen to. I will try to use as little accounting lingo as possible, and Victoria will stop me when I get too far using that language to pull back to say, okay, hold on, what does that actually mean? So at the top of our income statement is our sales. And in QuickBooks or whatever accounting software you are using, this can be broken out into several different ways. This can be broken out by the different services or grouping of products that you sell in your business. However, most of our clients, we see that they want to just see their sales grouped together and that they do the additional analysis in their point of sale system. However, other people want that detail. So our clients are, I think, 50-50 in this, where some people want to see their detail of the service offerings right in QuickBooks, and other people just want to see a general sales income line. So this is all of the cash that is coming into your business from your customers and clients that is recorded as sales. And I want to be clear that if you're doing your own bookkeeping, and I'm going to say this over and over again today, if you're doing your own bookkeeping, it's really important that you are correctly categorizing things, because if you do an owner's transfer, like an owner's contribution, and you accidentally record it as a sale, you're going to pay taxes on it. So it's really important that when you're looking at your sales number, that the bookkeeping is accurate and that you only have true sales from customers in that account.
Yeah. So just for everybody listening, if they're looking at their income statement and they're confused at the difference between revenue and sales, can you explain why those are the same thing?
Yeah, good point. So I think that's why accounting is so confusing, is that there are so many terms, and depending on what industry you've been in, if you came from corporate or not, you might call things different terms. And so sales and revenue are the same thing. They will be at the top of your income statement. And again, it is just the cash that's coming in from your customers or your clients.
I think that is very important to note that even within accounting, depending on your bookkeeper or your accountant, they might not also call something different, but just depending on how they're used to communicating with clients.
So don't forget, ask questions, because I think no question is a dumb question, but especially in that accountants are going to use different lingo than business owners. People in different industries use different lingo. So ask, what do you mean by that? What are you referring to? Next, we have our cost of goods sold. So this is any of the expenses that are directly related to delivering your service or product to your customer. And when you look at the accounting software, QuickBooks is going to lay out your profit and loss for you. And so QuickBooks will show you your sales and then total sales. Then it'll say cost of goods sold and then your total cost of goods sold. And then when you take sales minus cost of goods sold, that is your gross profit. I don't want to get too far into what is a direct cost, what is an operating expense, because this can be very different based on your industry. And so if you have any questions, you can shoot us a DM at Kickstart Accounting on Instagram, or come to the website and book a call at kickstartaccountinginc.com, and we can talk about your specific industry and how to handle it within your bookkeeping.
Yeah, I think cogs are something that generally can be a little bit confusing on what qualifies or doesn't. That's what I hear a lot of questions about. So if you're not sure, again, just ask. There are no stupid questions. And if you're not sure about something, always be on the safe side.
I think that overall, I just want to give you overarching kind of concept. If you have to have that software, that person, you're buying inventory, it's a cost of goods sold. Like if you have to have it in order to deliver your service or your product to your customer, then you absolutely need to classify that as a cost of goods sold. If you're not sure between cost of goods sold or operating expense, the end of the day, net, it's being captured on your income statement. And that is the one area that I'm going to say it's not the end of the world. You are still going to capture the tax deduction. You're still going to capture it on your income statement. I will point out to you as we talk about these three statements when it could be an issue if you misclassify something, but between cost of goods sold and operating expenses, it's not the end of the world.
Yeah.
Any other questions on that?
I don't think so.
Okay. All right, next we go to the operating expenses. This is everything else that we need in order to run our business. So, all of the advertising and marketing, facility cost, the payroll expenses, the team that we need to run our operation subscriptions, travel, conferences, coaches. Now, I will pause here to say if you are doing your own bookkeeping, you are probably using QuickBooks chart of accounts, and therefore your operating expenses can be very confusing. When we work with our clients, we have a very specific strategic framework that we use to group categories of expenses together so that we can analyze the financial statements in a very meaningful way. However, again, net, it's still landing on the profit and loss statement, and you're still going to capture the deduction. It'll just be more difficult to understand, is this a healthy amount to spend? And do I have any issues that require my attention?
Yeah, I think that's the most important thing is setting up your bookkeeping correct early on can help you plan for the future. So it can help you course correct, it can help you budget. So at the end of the day, like you said, you're still going to get the deductions from it, but it still needs to be correct.
Yeah, we want you to manage your business. So our goal at Kickstart is always for you to be able to use the numbers to actually manage your business, not just file your tax return, but actually run your business. And so that's why you'll hear us talk about why to classify things in this way. All right. So last is the net income or loss. And so we'll take our sales minus cost of goods sold, minus all of our operating expenses, and we will land with the net income or net loss of the business. And this is how every single financial statement out there always is structured. You might hear different terms thrown around: variable cost, fixed costs, SG&A, doesn't matter. At the end of the day, the structure of the income statement always lands you to the same place. Sales minus cost of goods sold minus operating expenses equals your net income. So when it feels really complicated, I want you to remember to keep it simple, because at the end of the day, they are all structured the same to get us to the same place, a profit or a loss.
Yeah, I think that is the whole purpose for this series, and the back to the basics is it's very easy to overthink it, overcomplicate it, because at the end of the day, it can be very simple. So don't try to overcomplicate it if you're just looking for something to think about.
So I heard this analogy used recently. And so if you are somebody who your mind works better with an analogy, I want to offer this to you. I want you to think of your income statement like a big pot. And in this pot is where all of the money and ingredients are going to go into the pot. And so money in, revenue, this is the part of the recipe where it shows you all the money that your business has earned, right? It includes all of the sales. And you can think of this as the ingredients that you put into the pot. Money out, or the expenses, these are the costs related to running your business. So these are the ingredients that you use up while cooking this recipe. So picture on your kitchen counter, you have all of the ingredients, and these are all the ingredients that you are using in order to create this recipe. That's your expenses. The profit is your cooking process, right? This is where we do the math. We take the money in and subtract the money out. And this tells us how much money you made or lost during that time. The profit, when we think about the recipe, it determines whether or not the recipe was actually a success or if you need to tweak it. I made these burgers over the weekend. That was the saltiest, most disgusting thing in the world. And we meal prepped for the whole week, guys. Like, we threw out a lot of meat, and that is a recipe, right? We use too much of the ingredients. So in this situation, I think that would have been a loss, right? We lost money on it. We used too much of the ingredients. And when I think about the overall recipe, I need to tweak that because I used too much of the ingredients. So if my business was losing money, I need to tweak how much of the ingredients I put in, because that's not the right amount. I need to tweak that so that I have a better recipe.
That's actually really funny. That's a great analogy, but I'm sorry about your burgers.
Oh, it was terrible.
But yeah, that makes perfect sense though. Like, if you're using too much of one thing, then it impacts your bottom line or your final product.
Yeah. Have you heard yourself saying, I'm scared to invest money in my business because what if it doesn't come back? I don't know how much to pay myself, so I won't take a paycheck yet. I'm reinvesting in the business anyway. Or how about, I'm not going to spend any more money until I know exactly where my money is going. Well, let me tell you, you are not alone. In fact, we have heard all of these stories and more throughout the last 9 years at Kickstart Accounting Inc. And that is why we have created the Money Mindset Mastery Framework, to finally unlock and overcome these stories, to finally feel confident in your financial decisions and pay yourself what you deserve. The first step to create a profitable and successful business is to first understand your money mindset. Find out your money mindset personality type by going to kickstartaccountinginc.com/quiz. I can't wait to hear what your money mindset type is. So I think we, as business owners, especially around money, we have a lot of mindset work that comes on into this. We have a lot of mindset stories that we're telling ourselves. We have been told through society, and every time I see one of these Instagram posts or reels, I just get so heated up and fired up. I think you sent me the girl math. We're going to touch on that in a whole other podcast. Um, but these situations that are being marketed and these programming for women, we pull that into our businesses. And as entrepreneurs, then we think, oh my God, this is so complex and so difficult. So if we can keep it simple and think, okay, hold on, this is just a recipe that I'm using for trial and error. So if you're somebody who likes to cook, maybe you start to think about your income statement, your financial statements as an opportunity to try out a recipe of your business and see what worked and what didn't work so that you can tweak it again. How's that
I like
land?
that you keep using the term recipe because everyone cooks differently, and sometimes you follow a recipe and it turns out perfectly exactly how you planned it. And then sometimes you go into the kitchen and you just want to throw something together and you end up with burgers that are like extremely salty. So that kind of goes to show that when you go in with this step-by-step plan, that and it may not always turn out exactly like the recipe, but it may turn out better than just going in and winging it.
Okay, so I promised you guys that we would talk about what most people look at and then what accountants focus on and what we look at as a firm. So, what most people look at when they're looking at their income statement is really just sales and profit. And I think profit, maybe even giving too much credit. What I really think that most people look at is their sales. And I can say that with confidence. One, after working with thousands of business owners and then seeing what is on the social media landscape, people are focused on sales. I belong to a business group, EO. You guys have heard me talk about them quite a bit. And the goal within EO is to hit $1 million in sales. And I have shared my feedback with them over and over again that $1 million in sales for one industry is going to look very different in terms of profit than another industry. And so, is $1 million in sales really actually the goal? No, the goal is to find how to run a profitable business, because having a profitable business is how you're going to pay yourself as a business owner and continue to hire and make an economic impact and continue to be able to thrive in your business long term.
Yeah, I definitely think that on social media, there's this culture, like the hustle culture of like, I had my first like $10,000 month. I see those like
Mhm.
on TikTok and Instagram all the time. But sales overall isn't necessarily a measure of how healthy your business is. So while sales are important, that's your money in the door. It's not it's not your bottom line, and that shouldn't be your only goal. It's great to have sales goals, but at the end of the day, that's not what you're taking home.
Yeah, I want to see some TikToks shouting out net profit. Well, we'll make one. We're going to make one. All right. So then what do accountants focus on, right? Because I mentioned our firm, yes, we use the bookkeeping that we do for taxes, but the bookkeeping is really a vehicle to be able to better manage our business. Again, our goal is to make a difference in our clients' businesses and to understand the numbers so that you can manage your business. However, most CPAs focus on the taxes owed and how to pay less in taxes. Like that is the big two things is, oh, you're profitable? Why don't we spend more money so you pay less in taxes? This is the time of year, and I'm going to talk about it a lot this year because it is very unpopular. And I hope that if I can save literally one person, like if I can save one person from making this mistake, I have done my job because around this time of year, fourth quarter, we start hearing tax accountants tell business owners, you are profitable, go out and spend money even though that's not your intention, that's not your goal, that's not what you need in your business, but their only focus is for you to pay less in taxes. And so people go out and spend all of this money, and then they realize that they had initiatives, goals for next year, and they don't have cash to be able to hit those goals the following year because they were so focused on paying less in taxes.
Yeah, I think that is kind of one of the biggest, most eye-opening things for me as a non-accountant to, and this might even be shocking to some like accountants, tax accountants out there, is don't run your business to save money on taxes. That paying taxes can be a good thing, and it means that you're making money. It means that you're profitable. And so that is a big accomplishment, and you
Yeah.
shouldn't spend a dollar to save a dime.
Yeah. I'll never forget. I believe I've shared the story before, but we had a client who came to us. I think this will be 2 years ago now. And she wanted to open up a second division of her business. And she had came to us in January. So year end was already complete. Her tax accountant didn't take into consideration that they had a business initiative in quarter 1 of the following year. And they had her spend a significant amount of money in quarter 4. And she listened because that's what her tax accountant told her. And she put so much faith in this team. And when she went to go open the store, she ended up having to take on a significant amount of debt in order to be able to do it. Now, that initiative has since saved her business over and over again because it has become such a consistent revenue stream and a huge success. I'm so thankful this client was coachable and I was able to work with her through the mindset issues of being able to take on debt. And because she was able to take on that debt, she was still able to hit this business goal. But that tax accountant could have really hurt her. I mean, she might not be in business anymore had she not been willing to take on that debt and start this new initiative. I don't think that her business would still be succeeding.
Yeah, and can that also affect long term depending, again, some entrepreneurs start businesses with the goal of selling in, 5, 10 years. How does that affect the selling process if you're spending all of your profits in fourth quarter and just to lower your tax bill?
That's a great point. When you go to sell your business, the new owner, investor is going to be looking at, they don't want to buy your revenue. They want to buy your business, the assets, how you run your business, your team. They are buying the whole thing. And so if you are always showing a loss on your financial statements and your tax return, you are going to get less money for your business. And so it's really important that you're managing that and you are showing enough profit that it correctly portrays the value of your business. Also, keep in mind, if you're self employed and you're not an S Corp, when you go to buy a home, a car, like any other funding, you're going to have to show your tax return. And so if you are always taking home a loss, you're going to have a very difficult time getting funding. And so we want to show a profit because that is how you can show the world that you are a healthy, sustainable business.
Yeah, definitely. And like you mentioned, that some people are looking at profit, but I feel like a lot of the time that you're just looking to make sure that you're making money. You're not looking at the percentage, you're not looking at the amount. You just want to know that you're not in the red. And those percentages still matter.
They do matter. And I think that that tees us up right to go into what do we look at, right? So when we are looking at the income statement for ourselves, right? So we do this as Kickstart Accounting as a business. And then what do we look at with our clients? So we're looking at not just profits, but how we're managing the business. So the big things that we are bringing our clients' attention to is the top 3 expense categories, trends, big changes or swings month to month. We're always looking at owner salary and reasonable compensation versus draws. If you're an S Corp, you are required to pay yourself a reasonable compensation. If you are an S Corp, and then once you've hit a reasonable compensation, you can take draws. So we're always looking at that ratio. Why is there a loss? Why is there a profit? And does it align with the business owner's intentions? Not all profit is created equal. You could be a business owner who is running a very profitable business and is not living the good life, right? They got issues at home, they haven't seen their kids, and it is not sustainable. I didn't realize until recently why there were so many businesses out there that talked about burnout. And I understand it now, right? Because if we have to run our business very intentionally and understand that just because we have more profit, that doesn't mean it's always better. We want to be able to have a healthy, sustainable business. So it's having enough support in our business that we're going to be able to stay around for the long term, and that we don't have any gaps within the business, that we're not spending way too much money in advertising and marketing and nothing in our support staff, or the other way around.
I definitely think that that comes back around to money mindset. And, we run into a lot people that aren't willing to reinvest in their business and they want to hold on to all of that profit. And I think that's a big accomplishment for some people. And yes, you have the right to celebrate. But again, you need to be willing to invest back into your business and start those new initiatives and create some work life balance for yourself.
All right, I want to leave everybody with a few issues that we see with a profit and loss statement, just to get your mind going. This isn't all the issues, but these are some of the common issues that we see when we're working with entrepreneurs, especially at the beginning of our relationship with them. So, issues that we see: sales that are not accurate because of your bookkeeping. If you sync your point of sale system with QuickBooks, this is like the epic mistake that we see people who are doing their own bookkeeping, that they sync Square, Shopify, whatever that point of sale system is, with QuickBooks. And then because the bookkeeping isn't being done correctly, they duplicate the sales. And this is very specifically dollars and cents in your business, because you are going to pay more in taxes because your sales are duplicated. And you're going to think you're doing better than you are.
Yeah, I think that is also something that if you're not familiar with QuickBooks or whatever accounting software that you're using, it's very easy to make that mistake and not realize it at all. And then all of a sudden you're wondering why you don't have any money.
All right, next issue. This is again a bookkeeping DIY mistake, is that the categories are not set up correctly. So you cannot actually use the information to know if you're healthy or not. So if you are using I call them like the dummy accounts, the standard accounts from QuickBooks, you might not be able to actually understand where your money is being spent and whether or not you are spending a healthy amount on each of the specific areas within your business. Next, we see that somebody is profitable in their business but doesn't have any cash. And so those individuals always think that there's a sales issue. And so they're always trying to fix the sales problem, get more sales, increase their pricing, without asking themselves the difficult questions: that are you, the business owner, the problem in your business? And so it's not a client issue, it's not a customer issue, it's not a marketing issue. It's an issue with how you're managing the cash in your business. And we'll talk about that more in the cash flow episode. And then the last issue we see is ignoring your financials during good times and not asking yourself why you're profitable. We talked about all profits not being created equal, but I heard somebody say to me recently that it's really easy for them to ignore their financial statements when they have sales coming in the door, when there's cash and when times are good. That's easier for them just to ignore what's going on in their financial statements until things are tough again. And we could prevent them from being tough by just looking at the numbers beforehand. Any other issues you could think of, or any questions on that?
I don't think there are any other issues, but I do just like that you pointed out that it's like you should always be looking at your numbers because those profitable times are going to help you in the long run, especially when it comes to things like seasonality. And so you can know your seasonality, you can know the patterns of your business. That way, when you have a low month or your sales are down, you know why, and you're not panicking. And I think that is like one of the big mistakes that business owners make is panicking and overcorrecting.
Yeah,
The overcorrecting, it's just like driving a car. What did they tell you? Like when you hydroplane, you have to like steer into it. And sometimes the biggest accidents are caused by overcorrection.
that was beautiful. Thank you for ending us with that. All right, we're going to be back talking about the balance sheet and the cash flow statement. So, your homework right now, I have two pieces of homework for you. I want you to go and like and subscribe so that you don't miss when we launch these next two episodes in the series. And then I want you to go look at your income statement. Look at the issues that we talked about. Do a little bit self reflection. Are some of these issues things that you have experienced? and then get ready because we're going to dive right into the balance sheet and then the cash flow statement. If you don't have access to these reports, if your accountant isn't sending these to you, if you don't have a bookkeeper, if you're doing your own bookkeeping and you need help, go to kickstartaccountinginc.com and you can book a call right there. We are only opening up a certain amount of slots each month, especially as we head into tax season. So keep that in mind. Come and book a call. Let's get you in before the tax season rush. I always say, my mom says there's two things in life you can count on: pay taxes and die. And it's not a surprise. You will pay taxes again in April. Let's not wait.
Yeah, definitely. Don't be one of those last minute people.
All right, Victoria, thank you so much for being here.
Thank you for having me.